stocks that have seen a solid run-up since the start of the year, with the pharma index hitting all-time high. Investors, of course, bullish on the sector as it is unaffected due to on the domestic slowdown front. And of course, we've seen one sector where there is clearly some bit of earnings visibility. Surajit Prabhudas Liladhar now joins in. Surajit, hi, good afternoon. Before we talk about individual stocks, your reaction on the latest news flow that we saw about the government allowing pharma company to hike prices of 500 essential drugs. How do you react to that?
I think definitely it's a positive, and it will give some headroom. At least for next 2-3 months, you can expect into say 20-22% of the total market, which comes under DPCO control drug regime. So that will be benefited. So along with already non-DPCO drugs has been giving the big boost. So these put together, I think anything around 15 plus kind of growth you can expect next 2-3 months.
Okay. What's your overall call on the sector itself now, Surajit? Because we've seen a big rally and the valuations have really been re-rated. It's one sector where we've now seen price earnings multiple at probably the historical high or even higher than the historical high. So do valuations justify this kind of move, or do you think there's enough earnings visibility to justify further re-rating?
I think FY17 very much the visible growth driver till FY17 very much in price. Given the kind of valuation the companies are currently commanding, is very hard to justify, even if I take their best case scenario till date from say 2009. So what I can tell you is that at this current kind of valuation, to give a positive surprise on numbers has a very less probability. So what it means is that most of the surprises are already priced in. And as an investor, new guy to enter at a current valuation might be a bit of stifling. They might not see much of headroom. So FY17 onwards, what lies in the future, it all depends on how you are decked up your pipeline to sustain into patent cliff era. Because FY18 onwards, that will be the era. So I think for that long-term perspective, Cipla, Sun Pharma kind of companies or Dr. Reddy's will be better off given the kind of pipeline investment they have been doing.
Okay, let's talk about some individual companies. Let's start with Aurobindo Pharma. How would you react to the news flow that you heard through the days? The stock was quite volatile. There's this QIP overhang as well. What's your call on this stock?
I think QIP overhang, the negative news which has come, which may not be very material for the company given a $1 billion top line. I think this $25 million, they have a likely possibility to receive positive outcome in the court. And overall, I think at a current valuation, definitely it is supposed to be volatile, which has been showing. So what I believe is that the better valuation fundamental you could receive H2 FY16, that is when they will receive their better product approval. But QIP remains a overhang because we don't know what number of shares will be issued and what valuation they will be taking QIP. So once that is settled, then we can look forward is that what will be the EPS, and then only we can fix the valuation of the company.
Okay, fair point. What about Glenmark? We saw massive re-rating in Lupin once the FI window opened, because for last 1.5 years there was absolutely no buying that FIs could do in Lupin. And same is the case with Glenmark now. It's stuck at 35% for last many quarters. Would you expect something similar in terms of re-rating for Glenmark, or do you think most of it is already in the price?
No, I think Glenmark has quite a big headroom. Their FY17 onwards, if you see the valuation, which is still 10-12, their peers are hovering around anything between 17 to 20 or 20 plus, so quite a big headroom. Company has a strong visibility in terms of key product approval, particularly limited competition drugs. Then the company will also have a good possibility of receiving $100 to $120 million of out-license fees in next 2 years. So I think company has a lot of drivers, which is not yet priced in if I compare their valuation with the peers. For just one example is that we are giving valuation jump from $800 million to $1.8 billion to Spark for the product which is basically NDDS or NDA product. On the other hand, the guy like say Glenmark, who has a lot of NC product or NDE product, which has a potential individual molecule-wise around $1 billion if it clicks. So their valuation is basically free. So they are spending around $50 million every year. So if I add back those things after deducting tax benefit, then you will find their valuation is very, very cheap with the peers.
Okay, so what's the kind of potential upside do you think that's there in Glenmark? What's your price target?
My price target 1186.
Okay, and what about Sun Pharma, which has been the biggest money spinner this year, up 40%?
I think Sun Pharma has become a big, elephant, big daddy in the sector. The company is good. The only uncertainty is that how fast they could turn around Ranbaxy, and how fast they could reduce the cost over there, and how fast they could receive the approval for the 4 plants which has been under FDA scanner. So I think you should give them 2 to 3 years at least before making any judgment on that.
Okay, and a couple of more stocks and your call on that. One is Lupin and Wockhardt, if you track.
I think Lupin has very much most of the key products are in the price. Let's see, because only surprise this company could give at a current valuation is their M&A. And that we have to see how this M&A turn around, particularly as companies say that they are not looking for any big bang acquisition rather than looking for specialized acquisition in various geographies, including ROW market. So that we have to wait how they are going to span out that. So that is the only, in near to medium term surprise could waiting in a counter. As far as Wockhardt is concerned, I think from perspective of fundamentals, I really not ready to value the company at a current valuation, because I don't think their USFD issue is over. It is still hovering, and the kind of serious allegation they had earlier, I don't think even next 12 to 16 months or 18 months will be enough to get out of that problem.
Okay, finally your pecking order in terms of the stocks that you like the most and the stock that you like the least now?
On the back of the valuation, I prefer Glenmark first, then followed by Aurobindo and Dr. Reddy. The least better in today's market, there is nothing least. Everything is what prefer you most. So I want to restrict myself into that.
All right. You want to make any disclosures?
No, none of the company I am holding currently, and my registration is in process.